Yo, what's up guys? Welcome back to another video. Today is Sunday. That means we're going to do our Sunday technical analysis. And in today's episode, we're going to focus in on the tech sector. So we're going to break down the NASDAQ and then we're going to look at 5 stocks, tech stocks that have fallen post earnings. A lot of these tech stocks had great earnings. They beat EPS, they beat revenue, but the stock still fell. One thing to consider coming into earnings season, and it's not all about EPS and revenue, and it's also about how big the beat was. A lot of stocks, a lot of these really big tech stocks are expected to beat expectations, and if they only beat by a small margin, you can still see the stock fall. Expectations are pretty high, and if they just meet them, a lot of these stocks will fall because the stock price is already pricing in that move. You can see a lot of these stocks like Microsoft, for example, one that we'll look at, moved huge up into their earnings report. And even though they beat, it was a small margin and the stock moved lower because it was already priced in. So EPS and revenue is not really everything that's important. Something for social media stocks is daily active users. So there's a lot that plays into these earnings reports and there's a lot that plays into the stock price. And that's why at times you will still see these stocks fall even though they beat on the top and bottom line. My job here today is to point out 5 stocks that have fallen post earnings that still delivered really good numbers that could provide us some really nice dip buy opportunities. So hopefully you guys will enjoy today's video. You'll find some stocks that have dipped post earnings that could be a really nice opportunity. Before we get into it, smash that like button for me as always. Subscribe to the channel if you want to stay tuned for these videos and press that bell notification so you're alerted every single time that we post on the channel. So guys, like I said in the intro, a top and bottom line beat does not always mean the stock is going to go higher. These big companies like Microsoft, like Apple, like Amazon, like Facebook, they are expected to beat every single quarter. They're expected to beat the expectations that the analysts put on them. So if it's a very small margin, or even if they miss by a certain number, a very small number, you will definitely see a negative reaction, which is most likely a short-term reaction. And that's why I like to find these opportunities, because I know it's a short-term reaction in the stock, and over time we can find an opportunity and see if we can move back higher. That's why in today's video, I want to point out these opportunities. So let's go ahead and first break down the NASDAQ, because that will be very important where the NASDAQ goes for a lot of these tech stocks. And then we'll get into those individual stocks that I see some really good opportunities on. All right, guys, so we got the daily chart pulled up here on the NASDAQ. Blue line, 20-day moving average. Yellow is the 50 and the green is the 100-day. We have the MACD below and we also have the RSI down here. So the first thing that you're looking at here is that the NASDAQ has basically traded sideways for the last 2 weeks. We have traded virtually between 14,040 and around 13,700 for about 14 days here. A very big consolidation zone, and I think it's because we have a lot of these earnings reports coming out and investors are waiting to see how these reports look. I do like the consolidation. I think it is slightly bullish that we're not just, either falling or going higher, maybe forming a blow off top, which is never a good thing. A blow off top is when a stock really overextends and you'll see a really harsh rejection to the downside. But consolidation is never a bad thing, especially around this volatility time, especially around these earnings reports. So we have consolidation. And the nice thing is that the consolidation is above this previous high. So we're sort of sticking above this 13,800 level, which was the high back in early February. So we have this high in early February, and we are consolidating right at that line. If we can hold this high and move higher off of this level, say we consolidate and then break towards these highs of 14,000, very good sign, I think, for the NASDAQ. But if we break below this line, there are some support levels that I want to point out in today's video. So the first one is obviously going to be this low. This was back on the 21st and the 22nd. The low of those candles is right around 13,700. So 13,700 is the first level that I do not want to see break, because if you break that, you're making lower highs, right? So you have a high, you have a lower high right here, let's say, and if we were to break this, we would have a lower low and a lower high form, and that is starting to be a bearish trend. You don't want to see that. You don't want to see a lower low form here. So that is the first thing that I'm looking at. Do we hold this 13,700 next week? If we do, very good. Maybe we can get a move higher with some of these other earnings reports coming out. We have Square, Roku, we have PayPal next week, so we have some big ones if you guys look at the earnings calendar. So some big ones that are coming out still. 13,700, And right now we are at the 20-day moving average, which is something also to note. Let's see if we can hold this 20-day moving average. If not, 13,700. After that, we have this very strong support level around 13,300, and we also have this previous high around 13,600. So we have some support levels down here that I would keep an eye out for. This right here is going to be very strong, I believe. You can see we had multiple times that we hit rejection here. So this, I think, will be the strongest, and that is also right at the 50-day moving average. That is basically the last line of defense, I think, here for the NASDAQ if we get any type of pullback on this futures contract. So any pullback to 13.3, we have nice support here, previous resistance that I'd like to see turn into support, and we have the 50-day moving average right at that line. So here's what I'm looking at on the NASDAQ. Volume is sort of drying up just a little bit. The MACD did turn negative, or did start to turn, the short-term trend did start to turn under the longer-term yellow line here. And then we have the RSI that's starting to fall off, but I don't think those indicators really are just, the beginning of a nasty rejection or a nasty pullback. This is just sort of the momentum that's happening right now. A lot of consolidation. We have support underneath where we are right now. I think it's going to depend on how these earnings calls come out next week. All right, guys, so the first one we're looking at here is Microsoft. Microsoft had decent earnings. They did beat on the top and bottom line, but they were by a small margin, and you saw the stock gap down off of earnings. So we had that gap down. We broke below the 20-day. The first level that I'm watching that I've been calling out in the Discord and on my Instagram is this $245 level. Do we pull back to that 245? That is previous resistance here in the beginning of February. If we get a move back to this 245, I would like to see us try to support here, maybe consolidate a few days, and then try to bounce higher off of that support level. That is what I want to see. Can we get to this 245? If we do, I expect there to be some support at that level because of this previous resistance. That's the first level I'm watching here on Microsoft. The next thing is this trend line that we have formed. So back from the beginning of January, we are still on this pretty nice trend line. So if we move back to 245, we should have basically two confluences here, maybe even three if we move back to the 50-day. We have this 245 previous resistance turning into support. We have this trend line that could hold right here. And then we have this yellow line, which is the 50-day moving average. So you could have three confluences right here at this level around 245, right in this box here. So I'm watching this 245 level very closely. I would watch it yourself. If we get any type of positive movement on the NASDAQ next week, I would expect Microsoft to try to come back from this pretty large gap down post earnings. So number one, Microsoft, watch 245. If we break below 245, watch the 50-day right around 242. If we even fall further than that, then you have a lot of this chop here above 230, which I think will ultimately hold in the long term. So Microsoft is number one. Number two is Netflix. Netflix had a big gap down. We all know that off of earnings, right? So they didn't have too impressive of growth for this quarter. The growth was one of the slowest in a very long time for this company, but we have fallen to a very strong trend line. So this trend line dates back to around August, October of last year, and we have trended on this line for a very long time. Now, the thing that I'm liking right now, what I really like, is this consolidation at this trend line. You can see for the last 7 days, we have consolidated here on this trend line. Very, very nice. The thing that I'm looking for a potential breakout to fill this gap, you can see this big gap on the daily chart. What I want to see is a break of this pivot high right here. That is 515.46. So I'm going to change this 515.46. And that is where I want to see us break out of. If we can break 515.46, hold it as support, I would love to see a move back and fill this gap. Now, I don't know if it's going to be straight up. I don't know how long it will take. This is why a play like this, maybe you grab some July's, some August contracts, some call options on Netflix, and see if you can play this gap fill. So Netflix, I like how it's holding this support. It has proven to find some buyers here around 500. We just need to see if we can break this pivot level right here around 515.46. If we can get this MACD to start to turn positive and the RSI to start to consolidate here, I would love to see a move back and fill this gap. Netflix is a second major watch that I have next week. Number 3 is Spotify. So Spotify had a pretty big gap down here off earnings, just about 14-15%, and we've come back to this $250 support level. You can see we found support here multiple times in the past, one here. We had a few times back here in July and August of last year. So we definitely have some support here at 250. Now, I'm not so inclined to get in Spotify just yet because these last 3 candles, especially this Friday candle, does not give me any type of confidence that we could see a bounce just yet. I do like the 250 support, but I also see the possibility of us falling to this support zone around 230. So 230 is another level that I would keep an eye out for. We could very easily fall to that level, and that is about 20 points lower, and with option contracts, that will destroy your call options. So for me personally, I'm going to give Spotify a little bit of time here, but I do like the fall that we've seen. I do like this 250 support. If that does not hold, I would love to see this 230 support. I definitely believe that 230 will be the opportunity. If it does get to that level, I think you can start to find some opportunities here for a move higher. One thing to keep in mind, Cathie Wood, ARK ETF, has been buying up SPOT a ton after earnings after this fall. So maybe that puts some confidence in shareholders that, Cathie Wood is buying the stock up on this dip. So Spotify, watch 250. If that does not hold, watch 230. 230 looks like a very strong support level that I would be keeping an eye out for. All right, number 4 is one that I'm sure a lot of you guys have been watching, and that is Tesla. Tesla has fallen post-earnings. 4 days of straight red, but on Friday we got a monster move up about 5% on Friday. And the reason for that, I believe, is that we fell right to this previous support line. So you can see we're in this ascending triangle right now on Tesla. Every time we hit this line, we are making a higher low, and we've been making higher highs. So right here, you can see higher highs and higher lows, right? So we're sort of in this upward trending channel. You could also call this an ascending triangle right here. So we found beautiful support here around 700, moved up and closed the day around 709 on Friday. If we can hold up past this 20-day, past this 100-day, and test this 750 area once again, I would definitely be watching Tesla for a breakout here. Ascending triangle is a bullish formation. If we can break above this 750 resistance, above the top of that formation, then it's most likely going to see a nice pump past that resistance line. Of course, we could see this chop around a little bit more. We could totally see something like this in this ascending triangle for a few more weeks until this breakout actually occurs, something like that. We could totally see that. So you don't want to get something short here. It's maybe a little bit too risky because Tesla could still consolidate in this range. But ultimately, if this formation holds, this is showing for a move higher. Every time I've seen an ascending triangle with a strong market, you usually see a breakout. Now, of course, I'm probably going to eat my words here if Tesla falls lower. But right now, this formation looks great, and it's something that I would definitely keep an eye out for next week, 2 weeks from now, and a few months from now. So watch Tesla. That's number 4. All right, guys. So the last one we're going to look at is PIN. So Pinterest. Pinterest fell post earnings just about 14 to 15%. And where did it fall to? This extremely strong support area around $65 a share. Now, one thing to keep in mind, this is not just an automatic buy. Just because we fell to this support, which has been supported 1, 2, 3, 4, 5 times in the past, we have found support at this level. Wait for some type of bullish confirmation. In the past, you can see we did put in a few green candles, daily green candles, before we made the move back higher. So if we can get a few green daily candles here, right around, let's say, Monday or Tuesday, if we can get some green candles here, giving us some formation to the upside, then maybe you can get this gap fill. So wait for some type of confirmation here. Don't just get in because you're at this support level. It could very easily break this support and things could get pretty ugly and maybe move back down to this gap fill. You can see we have this gap fill on the daily chart right around here, which is back in October. So maybe this stock wants to fill this gap, which would bring it down all the way to $54, which would destroy any call options that you buy in this if you're just buying this off the support. Wait for some kind of confirmation. Wait for buyers to step in here at 65. If you can get that, you probably will see a move back to fill this gap. If you do not get that, maybe you fill the gap down here around $54. But the reason I'm bringing this up is because we pulled back to a very strong support level off of earnings. If you think it's an overreaction, then maybe this is an opportunity. Here is number 5 and one that I will be watching next week. So those are the 5 stocks that I am going to be watching over the next few weeks to the next few months. A lot of these stocks have fallen post earnings, coming down to some really nice support levels. I want to see confirmation. I'm going to be patient for that confirmation to see if we can get some buyers at these support levels and move higher. I'll be looking at some swing trades, maybe July or August contracts, giving these plays some time, waiting for these dips to occur and waiting for that bounce to happen. So those are some stocks to keep an eye out for in the coming weeks, in the coming months. I hope you guys enjoyed it. Before you guys head out, if you could do me a solid and smash that like button, it really helps me grow this channel and helps these videos get out to more people. Make sure to subscribe to the channel for some future videos. I wish you the best in this week of trading, and I hope to see you in the next video. Peace.